Warriors. Hi, KT, BR. Hope everyone's doing okay. Want to remind everyone to get a hold of Forest Park FX to have an additional account, perhaps one that could pay for your subscription here, so that you have our traffic light page and you're not running red lights. Let's get to the markets. Gold plunging again. I have nothing RSI-wise. We're approaching Greg and Blake's target of about 1210. Who knows, we could be there today. But definitely this is not a time I want to be short gold. I was bearish gold all the way down to about this 1230 level, and I'm accumulating it. So underwater, but accumulating it for a bear market rally. Part of the rationale is the dollar is making new highs, but not a lot of follow through on it so far. Let's take a look at it. 95.50 has been taken out. So they got all the 50 stops. The high so far has been 56, not a lot. Not saying that we'll get a reversal from here. This could take us up to 96.20, 97. But be alert for reversals. Even the strength that's leading it is beginning to diverge. The yen here, as you can see, we have a confirmed high here. Here's our first non-confirmation, although it's above the 70 level. So maybe there's going to be a 3 here in the yen. One correlation that the yen has been working on, I know it kind of divorced itself from risk and from the treasuries, although the treasuries yields are heading up with the yen, which is a correlation that works. It just divorced itself from the S&Ps. But I think that we're getting close to where we should get a reaction, at least, you know, looking for pullbacks to 11.5. On this, everyone with me? S&Ps are lower. Was that it? At 28.10, 28.13 last week. Possibly, let's see, kind of week we're having here. Still unchanged on the week. The off number is way down here at 27.59. Of course, you can't say never, but my guess would be that we're okay. Maybe into next week, look for one more divergence in here. As you could tell, we are. Was figuring a little bit above 28, but between 28.20, 28.30 on the S&Ps, and it could be a big one. Okay, so you'll know when we start closing back under this 2800 level, and definitely 2790 where we had the last break. So that would be the first sign of it rolling over. I'm in the camp that I still think before we see this, we're going to see this. So there could be an outstanding short setting up. If you missed January, there's a chance you may see a repeat performance in the coming weeks and months that could take us back underneath this low. So that's going to, it looks to me like so far the S&Ps like this strong dollar. And I was talking with Blake about it, and he gave the correct answer. We don't know what effect the sell-off is going to have on the dollar. But knowing where the dollar is approaching, knowing that gold has been moving counter trend, the metals have been moving counter trend to the market, the dollar's approaching new recovery highs from the 88.5 level with the market, perhaps what we're going to see is flight out of US dollar denominated assets for a while on at least one part of this decline when it occurs. NASDAQ looking weaker, at least short term. This is its second down day. Had talked to Steve Volge about this. You know, this could be 1, 2, and maybe we get one more push up to 74.40. It's only another 80 NASDAQ points from here. You could see that we're diverging on multiple time frames in NASDAQ as well. But look how oversold we are already on the 1 hour here. So I would think we get, this look pretty impulsive, this move. This looks corrective, maybe an ABC, and we get one more shot up. So that's what I'm looking for into sometime next week. Oil giving no signs yet of a bottom. We do have a little 3 drive here. 1, 2, 3, and a higher low. Might be worth a shot if the market, if S&P is rallying, maybe we get one more rally up here in the crude. I know a lot of people didn't think this was going to be the high up here. And it does look like we have a 2 here. 1, 2. So we'll see about that. And just taking a look at some of the currencies that aren't yet making new highs. USD SEC is now trading at 78.6 back up here. See this? So talked about this yesterday. If you want to fade the dollar, you fade the dollar with markets that aren't making new highs with the dollar so far. You could say that about SEC. You can't say that about NOK. Nice call by Blake, looking for some type of recovery in the Mexican peso. Even the Canadian, at least at this point, isn't even close to these highs up at 34. So there are some conflicting things with dollar pairs. I think the Swiss is getting close again. No, Swiss isn't there yet either. So interesting that the dollar's making new highs without the Swiss. Okay, not saying that we can't go 104, par 40. I know that Greg is looking for this high to be taken out. So maybe it's just lagging, but it's definitely not leading. I have a great guest today, Samantha Leduc. This will be a return visit by Samantha. She's a very tenacious trader, trades a lot of stocks, a lot of different asset classes. She's an educator and trader, so looking forward to my conversation with Samantha at the top of the next hour. And why don't we just bring Blake in now in case there's some data that he's going to want to trade in 20 minutes. How are you today, Blake?
Good. Man, I woke up to a poop storm of movements. It's like I didn't expect this huge move overnight all over the market. I mean, there's moves everywhere. It's kind of, you wake up and you're going, holy cow, what did I miss? And I mean, yeah, UK
King dollar.
Yeah, well, the culprit is right now, and I'll take the charts here in a second. Let me just grab the U.S. dollar CNH.
Oh yeah, I saw that. The yuan.
Yeah, it is flying. So let me grab the charts really quick. This is investing.com. I want to welcome all the listeners that are coming in from over there, by the way.
Oh yeah.
Yeah, so I forgot it's an investing.com day, which is on Thursdays. But, you guys are more than, if you're listening in from investing.com, we do this every single morning. So just letting you guys know. So here is the renminbi or the yuan. It's getting absolutely demolished. And, the guys in my office were like, this persistent devaluation of the yuan is just, it's offsetting all the tariffs that are being imposed. So, you're just weakening the currency here, and that's allowing for, the dollar to really appreciate across the board too. I mean, the dollar yen is extremely strong. Bonds are a little weaker, so yields are higher, and obviously precious metals have slumped to pretty key support here. But there are a ton of movements, and this is all really a product of the renminbi. And yes, it's divergent, and yes, we're at a 70, where we're getting to the 78% retracement, but it doesn't matter right now. You got to kind of stay out of the way currently, because this move, this is, in my opinion, this is China's way of combating our trade war that we've gone into. So and it looks like it's going to continue. So the question that I have, and Dale, I don't know if you had stepped out or if you're still here. Okay, so the question I have is, if stocks weaken from where we're at, which, by the way, we hit the 127% extension in the S&P. Matter of fact, we should probably do this really quick, just to from high to spike low. Okay, so we're at the 78% retracement. You can see that right there. 127% extension, and this should actually extend right to here. Let's say we reject here in the S&P, which I think we are. You know, I've been kind of in that camp for the last couple of days, and the Nasdaq's, you know, made a false breakout, and the Nasdaq's rolling over a little bit. So if stocks start to weaken, what is the response in the currency market? Like, what do we as currency traders do? Because you know, with yields rallying, I don't want to short the dollar yen, because the dollar yen is just, you know, extremely strong. This is following more of the renminbi, but usually if there's risk off, what I'm doing is I'm buying yen. Well, at least in the past. So, you know, I'd short the euro yen, which, you know, obviously is following right now, the pound yen, which is coming under a lot of pressure. But the Aussie yen and the Kiwi yen, you know, they've been holding up pretty well, but you can see actually today they are both weaker. But the question is, do you buy yen, or what do you do if stocks continue to weaken here? And I am, you know, I'm not 100% sure, but what I am more confident of is buying the dollar. And as you can see, the dollar is actually challenging resistance right now. And, you know, we have to imagine regarding the dollar. All right, let's think about what had happened here, and let's just reverse a little bit. Let's go back like this. All right. So you had the dollar look like a double top. We're a challenging channel support. Everybody gets short the dollar, right? You know, you think, oh, you know, here goes the dollar. Dollar's done for. We're going to start retracing here. Double top, breakdown, hit and channel support. Then all of a sudden we're reversing, and now you got the market that's short dollars. And the dollar that looks like, in my opinion, is going to squeeze towards 96, and if not higher. So here's what I would envision the dollar doing. So if stocks continue to stay weak, the dollar looks like it's going to continue higher, and that is something that I think traders need to be aware of, is that the dollar is at pretty key resistance here, and chances are the dollar is going to continue to break out. And if the dollar continues to break out, what are the ramifications here as far as you know, as far as what do stocks, you know, do from here? And I don't know. I'm just trying to put, you know, all the puzzle pieces together. I try to explain and have over the years that when I look at the market in the morning, you know, the first thing that I do is to me, it's like a puzzle. It's like a, you know, 100-piece jigsaw puzzle. And I got all the pieces that are scattered all over my desk. And I'm like, all I'm trying to do is put the pieces and put the picture together. That's all I'm trying to do every single day, you know, trying to figure out, okay, if we see this, if this, then what? If this, then that. You know, if I see this, then I'm going to do that. If this happens, then that means I'm going to have to react this way. And that's what I'm trying to do right now, is I'm trying to figure out, okay, well, how am I going to react? You know, if stocks go down and they continue to be under pressure, which, you know, I know it seems a little laughable, and, you know, everybody's like, well, yeah, but the stock market never sells off. Yeah, I know it's resilient, but we still have to be prepared for if, you know, the market does eventually buckle under pressure, because we are, and any which way you slice it, Dale, we are faced with a trade war. And you would think that eventually it does weigh on the equity markets. I know it hasn't shown it hasn't reared its ugly head yet, and I know the seasonality hasn't really done anything either. But you know, I look at stocks, and I guess, you know, the thing that would probably concern me the most is if the S&P drops from here, which is 2805. You know, if we drop another 20 points in the S&P, then we're going to be testing some pretty key support. And
2790.
Yeah, 2790, 2785, somewhere in this neighborhood. I think that you know, you can really, you know, setting
That would make
setting
it
an
look
alarm
like a false
or,
breakout.
yeah, and then, you know, at that point in time, then we have to be a little bit more concerned with, you know, with stocks, and again, you know, if stocks come under pressure, what do we do? You know, what do we do as traders? How do we react to that? And that's the
Aren't you
question.
aren't
Go
you
ahead.
kind of surprised the administration, you know, like Peter Navarro and stuff, haven't called China out during this trade war, you know, for years? It was like going to be a big deal to label them a currency manipulator.
Well,
Well, now why would it be a big deal? But they are manipulating it.
well, okay, so that you know, we were just discussing that as well. At what point does the administration take notice of the yuan's weakening? You know, at what point do you go, okay, now this is becoming a problem, and that might be above 7. Maybe it's if the U.S. dollar climbs above 7 on the U.S. dollar CNH. That is where it becomes like, you know, the alarm starts being sounded, and I don't know what that is. You know, I don't know. I'm not sure, but it's something.
I'm just surprised they haven't said anything yet, being in this trade dispute.
Me too. I noticed you call it a dispute, and I call it a war.
Yeah, well, you know, a dispute is before you start punching each other.
I guess it is. I
right?
guess it is.
You know, you're just yelling at each other. There's nothing physical yet.
Right. So anyway, you know, just things that, you know, I think we have to, you know, pay attention to and try to figure out what, you know, what the best response is in these situations. And so let me go over a couple of other quick things really fast. So, you know, here's the Euro's, you know, closing in on that 115.75. I think we talked about this yesterday. This could be, you know, if you look at this, it's, you know, it's possible Gartley pattern here, right? Something like that, or like that. You know, what I'm trying to point out is that we might find some support in the euro dollar down here, but then you know, the flip side is if you trade harmonics, this could also turn into a butterfly too. So, you know, you gotta be a little careful if you're trying to pick up some euro dollar down there. The pound looks extremely weak. I thought we were going to do a false break down yesterday, because we closed back above this 130.50 level, and the retail sales overnight, oh my God, it was a 0.5%, negative 0.5% versus 0.1% expected. So that's some horrible data out of the UK overnight. So just you know, that you know, that on top of Brexit worries, on top of dollar strength, has just weighed on the cable. And frankly, as I was telling traders yesterday, I'm like, the pound looks like it's going to 128. And I thought maybe it was gonna, I thought maybe it was gonna try to not do that, but you know, the retail sales and everything else has just looks like it's you know, we're gonna continue lower here, and you got to be really careful buying the cable. I mean, there's so much uncertainty right now, you know, on top of, you know, potentially weakening data, you know, potential dollar strength coming in, you know, the pound looks extremely vulnerable, and it did yesterday. I was just, you know, I was more concerned that we might make a false breakdown yesterday, but like I said, the data overnight just really is weighing on the pair. The Aussie, I mean, this continued trade dispute, the weakening of the renminbi or the yuan is really weighing on the Aussie dollar. The Aussie looks very weak. We had strong employment data overnight in the Aussie. The Aussie spiked up to 74.40. We're down at 73.30 right now. So think about all the traders that bought the Aussie last night. They got up this morning. They're just turned around, all the way around. I mean, it is just a gnarly move. The Kiwi dollar also looks extremely weak. You know, the Kiwi's been, you know, very sloppy. This is probably the sloppiest market I've seen in a while, but extremely weak. And take a look at the Canadian. So I pulled off the pattern in play yesterday as we you know, dropped back below 132, because I was thinking, okay, well, you know, Donald Trump yesterday announced that that he's really close to getting a deal done with Mexico, and that you know, probably before Canada, but that alluded to the idea that that we are going to get a NAFTA deal done with Canada and Mexico eventually. So the dollar Canadian, you know, sold off. But you can see this morning we reversed and we're all the way back up, testing really key resistance here. This is the resistance we talked about yesterday. We hit it, reversed. I was long the dollar Canadian, sold it. I picked some up yesterday on this little dip, and then I got stopped out for a loss. I actually drove my son to camp. I was just about to get to that location. This is only, by the way, this is only a 15-minute round trip drive. I'm like, yeah, you know, no problem. I'll take my son to camp. Why not? So I drove him over there, and as I was actually just about to get to that location, the dollar Canadian slumped to 132, and then, you know, eventually broke lower on that headline. And the same thing happened with the peso. Look at the peso. The peso sold off. Okay. Dropped to 1880, and we've reversed, and we're almost at these highs. And I'll tell you what, if we break 1910 in the US dollar Mexican peso, it is going to be a pretty bullish move. You can see this, you know, here's the down channel here. Let's see if I can do this. Let's go to a 4-hour. Maybe it might be better on a 4-hour chart. There's a down channel.
Looks like it's coming out of the hole like you were talking about, Blake.
Yeah, I thought we were going to eventually just drop one more, take one more leg lower, but I don't know. You know, I don't know. Oops. That's not going to work. Hold on. It looks like we might be breaking right now. But you can see this down channel in the peso. We break above 1910, and it's going to rip. And look at the dollar Canadian testing right now. Dollar Canadian, this is going to break out higher. I mean, you got, and I didn't even mention yet. I didn't even mention the weak precious metals. Now, precious metals are in very, very important support here. You can see silver, 161% extension. Silver continues to break down. Gold, we're at the 618 retracement. You know, a lot of support down here. But, you know, look, gold broke 2 days ago, 3 days ago. We talked about that break, and I can't believe, I still can't believe that I didn't put in a pattern in play for gold. You know, it's one of those things that I knew I should have, and I didn't on this break of support here from 2 days ago. But we're at the 618 retracement. But frankly, you know, we could go lower than that. You know, it take this low to high here. I mean, we're at a 50% retracement. 618 comes in, you know, at 1171. So I mean, it looks like we can continue lower in gold, but this is, you know, obviously we're in some pretty key support zone. But breakthrough 112 or 1200, excuse me, 1205, and we might trade at 1170. So gold looks very vulnerable. I mean, we're dropping right now. We're at support. It might be worth trying to take a little counter trend long. I might actually try to take a counter trend long, but I'm going to keep a pretty tight stop. I'll tell you that much. But you know, again, this is one of those moves that's happening because the yuan is under a lot of pressure right now, and the U.S. dollar is just rallying against it. So, so a lot of really big moves here in the currency market, and I didn't even get into the yen. The yen, you know, continuously really strong, even despite the weak stock market. You know, dollar yen continues to rally, and that's why you kind of have to throw the idea out now. You know, if the stock market is weak, which it is right at this moment in time, at least, you know, this morning, buying yen doesn't make a lot of sense, at least not the dollar yen. Maybe, you know, selling pound yen or something makes more sense. But the yen is not acting like it normally would under these types of conditions. So a lot of you know, and a lot of interesting moves. And I told you guys as the dollar yen broke this 111.50 a couple of days ago, or I'm sorry, last week, that as we broke above 111.50, that we might have to change our thinking as far as what do we, you know, buying yen, risk aversion. And that's exactly what's happening. It's like, you know, stocks are coming down right now, but no one's buying yen, or at least not dollar yen. So very, very interesting moves right now, and a lot going on. So with that being said, hold on really quick. Okay. I'm going to pass things over to Steve. And good morning, Steve. Are you there?
Hey, Blake. Good morning, mate.
Hey, good morning, buddy. How are you doing?
I'm good. Have you seen copper, by the way? And speaking of copper, Oz is currently breaking down, actually. I mean,
yeah, I'm sure Aussie is. I mean, look at gold. Gold just broke 114.
Yeah, but copper is copper has dumped more than 19% in 30 trading days.
Oh my gosh. Well, you're gonna have to show us what copper looks like.
It doesn't look pretty, I can tell you that much.
I'm sure it doesn't.
Here it is. Just look at it. From this double top, because actually that was a double top, as you see up there, we have a target at 256. So when we're actually breaking the support here at 294.
Oh my God, that's so ugly.
I said that we're going to 256, and now that we've sliced through the last area of support before that, I do think that this target is going to be fulfilled. And you know, if we actually make it there, which, you know, looks very, very likely, that's going to be like almost 23% lower. So it's a huge, huge move to the downside. Huge move. And that's why I doubt that Oz is actually going to hold this area of support that it's currently testing. It looks very heavy. Personally, I think that we're going to slice through that and perhaps head towards the 161.8% extension of the last move higher, which is at 71 cents, or at least that's how it looks at the moment. RSI is also testing support. So, you know, I think that unless we see some big reversals, Oz is more or less bound to break lower, and Kiwi equivalently is almost at support as well. We have here this descending trend line support passes roughly from 67 cents. I think that if we break through it, we then have a nice confluence of supports at 65 cents. So I think that, you know, Kiwi likely is also going to be headed towards that area. So, you know, commodity currencies don't look good. And, you know, yesterday we were having a look at the USD NOK, and, you know, I said that, you know, either a break below 8 or a break above 820, you know, should extend. And look at the candle we're getting today, right? I mean, once we slice through 820, just, you know, skyrocketed.
Jobless claims continue to drop. We haven't had the Philly Fed number. We came in at 207,000
versus 220. Yeah.
Yeah, very good numbers. And then we have a good Philly Fed that came out at 25.7. So.
Oh, that's actually like 20% above expectations. Roughly.
Yeah, and
look at the components. Philly Fed prices paid 62.9 from 51.8.
Wow.
New orders high, employment low though. So this overall, it's good numbers.
Great numbers here, and the dollar is responding.
Indeed, it is.
The dollar is responding. So, all right, guys. Well, hey, good luck today, and thanks everybody for being here. And don't forget, for those of you that are looking for a broker to fit your needs, you visit our webinar sponsor. They're the reason why we can continue to do these free webinars. They are Forest Park FX, and you can get to them right through our homepage. Just click on the reimbursement program, and there's their contact information at the bottom of the page. So thanks, everybody.
Good luck today.
Thank you, Blake.
Thanks,
See
and
you
good
later,
luck.
mate.
All right, see you guys.
USD yen, by the way, just testing resistance once again here at 113.20. It already like held once, but so far today we have an outside white candle. So I don't know, USD yen looks like it wants to breach through that area. RSI is though at 75, so obviously buying up here doesn't make much sense, but definitely the dollar is ripping. Cable is trading below 130 for the first time after, what is it, 10 months or so. Also slashing through the 127% extension of this last move higher. I do think that the next stop is roughly at 128.50. We have a nice confluence of supports down there. I think that from this point on, 130.50 should be resistance. So Euro USD still not at the 115 horizontal area of support, but from what everything looks like, I do think it's going to make it down there, and most likely it's also going to bridge through that area and push at least once more to the downside. As you see, this RSI, this ascending RSI trend line, which was clearly a corrective move, we can see that because we went up from below 20 to like 56, 57, which it's an ideal recovery of the RSI profile. I mean, usually in a downtrend, you want to see, in a correction, you want to see RSI go up to 40, 50, 60. Usually, if the move is strong, you don't see values above 60. So, finding a ceiling somewhere between 50 and 60 is, quite healthy. And, now that the market has actually overcome the oversold conditions, it seems that it's free to keep moving to the downside once again. As I was saying before, USD NOK, I said that, to me, USD NOK looks like it wants to break through 820 and only break below 8 will actually change the picture. It's done that, it's accelerating. I think that the next move is, this move should be expected to bring it close to 840 again. There's also this longer term descending trend line resistance. It's currently just below 840. So, I think we should be monitoring this, but, USD NOK definitely looks strong. Yesterday, I actually shorted just half of a position of USD CAD, like what was like 40 pips below here. I still have it, but I don't want to hold it if, if we breach through this zone, because, it looked like with yesterday's very nice reversal candle, which was a shooting star, and, an ABC, because up to that high, it was an ABC right on resistance. It looked very nice for one more push towards the 130 area. And I think that it still can happen. But, it might actually also like move higher from here. I mean, the structure looked nice for one more leg to the downside. I was really looking forward to riding it to 130 and then reversing my position to long. But it might actually not manifest. We're going to find out, I guess, rather soon. Now, having to do with stocks, yeah, we're seeing some weakness up here, especially we were showing yesterday the Nasdaq. The Nasdaq is, was right on confluence of resistances, 127% extension of the last move lower and 127% extension of the previous move lower. Both of them like coincide at roughly 74.35, 30 to 35. That's actually the level we tested yesterday. We found resistance there. Of course, from that to claiming that it has reversed, we definitely need to be monitoring, and we definitely need to see like a bigger sign to feel confident that it might be reversing from here. But definitely the fact that the Chinese yuan has been depreciating vastly is definitely something that shouldn't help with risk appetite. Just look at this. I mean, we were expecting correction down here and move higher. That's exactly what happened, but it happened faster than expected, and this now has started becoming almost a parabolic recovery. We do see very clear RSI divergence, to be honest. Although by having the RSI hit 90 the previous time, when you get so extreme readings in the RSI, divergences, especially when we're talking about divergences above the 70 area, or anyhow, if we're talking about divergences move lower below the 30 area, are less important. Usually, nice, reliable divergences are divergences that you see the first print being at overbought or oversold territory, and the second one not being in overbought or oversold territory. But anyhow, we're approaching, as Blake said, the 78.6. This looks like a very, very strong move higher. And it's obvious, it's more than obvious, that the Chinese are retaliating not only by imposing tariffs on their own, but also by weakening the yuan. And something, it's very easy to see here that the yuan, the USD yuan, moved from 6 to like 7 in a period of 3 years exactly. Then we moved lower. It took us like roughly 15 months or a move lower, and we've almost retraced 78.6 of that move in a fraction of that time. So this move higher looks impulsive for the time being, and considering the previous move high from 6 to 7, I don't know, why not even bridge the highs. And definitely that's not gonna it's not gonna be an easy pill for the market to swallow. Now I need to also point out a few more things, which are the following. One, a very impressive rejection both in the Aussie and the Kiwi yen. Aussie yen is obviously still trading within this channel, but so far today we're seeing an outside black candle. And if you look at the area that we found resistance, that's the confluence of the 38.2 of the last move lower. It's also a horizontal area of support resistance. At the same time, if you look at the Kiwi yen, just look at where it got rejected, right? This is clearly descending trend line resistance. Very nice rejection from there, a very nice evening star formation. I think that if we see a daily close below 75.80 roughly, that's going to be a good indication that we might be moving once again to the downside. We've already shown the Aussie USD and the Kiwi USD. So, I already showed that those are currently testing and, are about to break through very, very important areas of supports. So, they don't look good either. So obviously the dollar looks extremely strong. We had already warned that the dollar likely has at least one more leg to the upside, because this was clearly a triangle. Initially, we were viewing this as a potential ascending wedge. But the price action and the fact that after we broke below it, we didn't see some type of an acceleration, made it then more clear that the structure was triangle. Triangles are continuation formations. The triangle is breaking, and at the same time, as you see, RSI resistance is also breaking. And the next area of resistance to be looking for is the 96.40 to 96.50 area, and above that, then we unlock the 97.87 area, which is the 61.8% fib of the whole move lower that started at the very beginning of 2017. So, we have no reason for the time being to be looking lower in the dollar. Okay, selectively with some currencies perhaps, but, the broader idea here is that the dollar is still in recovery mode, and trying to fade it at the moment doesn't look like a good idea. We have absolutely no technical indications that, it's about to reverse course. So, I would definitely caution against it. Now, let's have a look at a few more things. First of all, crude. I was warning yesterday about crude that, let me switch to crude here on the 4-hour chart, that, crude was consolidating, but that consolidation so far doesn't look like a reversal. And yeah, indeed, we have some type of a consolidation here. We don't know yet what kind of form it has. It has to be seen. But so far, it doesn't look like something, a beginning of another move to the upside. So you need to keep respecting the possibility of more weakness, right? So watch this trend line support And I think that as long as we remain below 70, you have to respect the possibility of one more weakness. Currently, we're just working out the oversold conditions. You can also see that from the RSI. Usually, this kind of RSI lines are useful because they give you extra confirmation of when a move is actually resuming. So, keep a close eye to that. Now, some more currencies against the USD. One of them, let's have a look at them on the daily chart. So, not only USD NOK rebounded from a very important area of support, but also the USD SEK. We were showing that during the previous week. It respected this ascending trend line support. At the same time, it respected that horizontal area of support, and it's moving higher once again. When we were testing that area, we had two likely scenarios. One of them, another push higher towards the 910 area. The other one, if we broke lower from there and moved towards 850, the first scenario manifested. We got a rebound from there. So, 910 looks like a nice area to test. This is going to be the fourth test of this ascending trend line. This can likely be an ascending wedge, so it can end up having bearish implications, but definitely not yet. We first need to get up to 910, see what's going to happen from there, if we actually going to get rejected, because you never know, and then we take it from there. I'm also monitoring this RSI trend line. We're about to test it. This is also going to give us a good indication of what USD SEK wants to do in the longer term. Now, USD MXN, very nice rebound from here. Definitely, it was definitely extremely oversold. I do think that the move lower is impulsive, so I have to be honest here. Having to do with the USD MXN, it's one of the currencies that I would actually gladly be looking for opportunities to short the dollar. So obviously we have to let this rebound play out. Because I don't think it's likely that it's going to play out in like 1 or 2 days of a recovery, right? Because it got beaten down like severely. But I do think that eventually this rebound should fail. Okay, USD ZAR also found the second area of support we're looking for, and it's it's showing some nice rebound. Let's see if we're going to close above 1340 to begin with, and then we can perhaps view this as a corrective move and the resumption higher. Perhaps this will end up being just a pennant, right? So this has already happened. So this might just end up being a bullish pennant, right? So there it is. There it is. So we need to keep a close eye on this and see if we're going to get something like that and headed towards the next area of resistance at 1440. Okay. USD Turkish lira, obviously another consolidation after pushing the new highs, but I've said it multiple times. Don't try to fade this. It's going to be lethal. We're still trading above the previous consolidation, which was the triangle. As long as we trade above the triangle's resistance, I see absolutely no reason that you should be looking for lower prices in the USD Turkish lira. I think that the chances for another push higher to actually break through the 5 level is, more than likely. So I would be very, very cautious here. And one more I wanted to show, especially now that we have so much attention to, Russia, etc., is USD ruble. It's very clear here that the USD ruble is within a perfect triangle, a symmetrical triangle, which means that I would expect that the chances of a break to the upside are much higher than the chances of a move lower from here. So I'm going to be very closely monitoring this trend line resistance, and buying a breakout probably looks like a good idea, because if you look at it, there is a lot of potential for upside, right? I mean, even if we just break above it and we push towards the next area of resistance, which is the 38.2 of the 86 high that we had to the lows at 55, that's still a decently big move. I mean, moving from 63 to 67, that's like 7-8% higher. That's not a bad move for a currency. So I would be monitoring this closely, and at the same time use the Singaporean dollar. We were monitoring this very closely when it was breaking above the channel. It's now breaking another area of resistance. I think it still has more upside. So if you look at all the exotic currencies, US dollar looks very, very, very strong against them, and that's something you have to keep in the back of your mind. Add to that it's extremely strong against all metals. We saw them yesterday. Again, I mean, copper on its way to the double top target at 256. Palladium, I warned that 900 is the next area of support, and I warned that after breaking through this triangle, there's more downside. Now that we're slicing through the previous low, it's just accelerating lower. And if you look at the big picture in Palladium, look how recently we broke above a major trend line support. So Palladium likely has a lot more to the downside, right? Look at Platinum. Platinum is more or less trading in uncharted territory now, right? I mean, we are currently threatening to break below the 2008 lows. And look at how heavy it looks. I mean, it hasn't managed to put in any kind of a recovery. Silver is just slashing through its area of support like it's nobody's business. Next stop is the 78.6 from the flash crash low to that high at 1483. Gold, if I zoom out, you can see that definitely this is a major trend line support that we've sliced through, and a testament to how important that was is the fact that gold actually accelerated. I mean, it stayed here testing this area for several days. So there was an obvious attempt for this area to be defended. But once this area actually failed, gold started accelerating to the downside. And now the next area of support is the 127% extension of this recovery higher, which comes at 1,202. Just below that, we have 1,190, which is a horizontal area of support. So I do think that gold is probably going to make it to at least 1202, if not at 1190, right? So, dollar is like ripping almost across the board. So, you need to keep respecting that. Now, there's a couple of more things I wanted to show, and then I'm going to pass it to Andre, because Andre is with us. He's going to have enough time to show us a couple of harmonic setups. So, Andrea, you're not going to have much time, so choose carefully like 2, 3 of the setups that you have highest conviction on, so we can go through them. But I wanted to show the 2 benchmark bonds first as well, because one, here's the Bund. Bund is actually testing resistance of a flat top triangle within a large descending triangle, which is likely a big consolidation. Because if you look at the huge uptrend that we had until we went in here, bottom line, at some point, it's very likely that we're going to see a break to the upside. Of course, initially, you have to respect the potential for this area to act as a resistance. So I'm not advocating that somebody should be buying the bonds here. Actually, a reward to risk would advocate that perhaps shorting is a good idea, but you always have to keep in mind that a major breakout, for example, a daily close above 164.40, is definitely going to be a very, very bullish breakout. So you have to keep that in mind. And last but not least, the treasuries. The treasuries were looking like they could be also breaking higher, but instead they're breaking lower. Now, of course, they haven't still broken below this horizontal area of support, but if they do, I think that yields would be moving higher, perhaps accelerating higher once again, because that's quite an important level. If you see the inverted, which are the yields, is there a chance that the yields are just trying to build a base above this inverted head and shoulder scenario? Of course there is. And perhaps this is like a triangle here in the yields. Don't forget that this inverted head and shoulders formation has a target a lot higher than where we are. So keep that in mind. I'm monitoring closely this area of support. So there is that potential as well. So Andrea, I'm going to pass you the baton. Dale, who do we have for an interview today? Panelist, there you go.
Hello, everyone. Steve.
There you go, mate. I just passed you the screen.
Okay, let's try to be fast because there are a lot of things and I want to monitor too, I believe. Can you see?
No, I still can't see. Yeah, now I can see your screen. Perfect.
Okay.
By the way, there's a question I want to answer very fast. What is the question was, what is the DSI for gold and silver? Both of them are very, very beaten down. Yesterday, actually, they had a little rebound. They rebounded from levels like 7 and 8. They rebounded to 11. But I think that this is just a little rebound because I'm expecting with the price action we're seeing today, I'm expecting that the DSI for all metals is going to dip down to the single-digit territory once again, perhaps even deeper to single-digit territory than it was yesterday. So, Andre, what are you looking at the moment? What is drawing your attention?
Well, and because you were mentioning the copper, I want to push that one eventual bullish setup. We are approaching now. Actually, we are facing now the 161.8 extension. I'm trying. Correct.
We've been breaking below it actually, and in my opinion,
breaking below.
Exactly. We might be headed to 256 because that is actually the target of the double top.
The double top. Might, it's synced with the 50% retracement and the 200 media average. So we have the 200 media, the 50% retracement synced with the default projection from the double top. A few points below the 61.8, it's synced with the previous structure supports, also 224 extension, 2.46. It's a bullish. It's another bullish shark setup. It's the last shark territory at 224. So those are the two levels. If the market fails to bounce from this area, I believe they will force a price to retest, at least to retest its previous structure. And obviously, if failing to hold above these levels, obviously it will sink. Dollar versus Chinese yuan. It's also very interesting because you have mentioned actually it was Blake, I believe. We are approaching now the 78% retracement, but based on the most recent price structure and FIB ratios, we are facing what we can call a bearish, actually it's a perfect bearish cipher pattern. So it will complete at 6.82, and by default, that will depend on the objective of the market movers, obviously, but by default, it's a pattern that will search for the 38% retracement. Obviously, we can try to sync this 38% retracement with the structure, with the highs of the structure in order to try to project the price above. So let's imagine something like retesting the previous structure highs. We'll get a synchronization between the 38% retracement and the highs of this previous structure. So the market can actually extend a few points above, but it's approaching now the 78% retracement. It's a default bearish cipher territory. So
yeah, and at any given point, I mean, from a fundamentalist perspective, looking at it as well, at any given point, if under the table we have any kind of capitulation from the US side having to do with tariffs, you can see a very, very strong snapback move there. It's very likely.
Yeah, and actually by default, that's the kind of movement we search for on cipher patterns, but because usually they will produce fast movements in a counter trend movement. So that's the type of movements that we search for on the harmonics. So we like things like a touch and run. So I don't like to see the price starting to consolidating and moving sideways above those fib levels, the completion points. I like to see the price with producing fast reversals, obviously, but sometimes it will not happen. So moving on, this is West Texas oil, and we are approaching another alternate BAT pattern at 113 extension based on the fib ratios and the last and most recent price action. We are approaching the 66.90. So it's a fib level where by default the market will produce some type of relief. I will not be surprised to see oil trading lower, or even searching for the 78% retracement a few points below. For that to happen, obviously, we need to wipe out the most recent structural support, and we are now facing.
Yeah, and people should anyhow keep in mind that crude is in an uptrend. I mean, despite seeing the correction move lower, we still have to respect. Yeah, exactly. The uptrend that it can re-emerge at any given point. So looking for a rebound in crude also bodes well with the longer term picture, right?
Right, Steve. But note that we are facing a crucial level, in my point of view, on a higher time frame. I'm trying to be faster, but somehow my browser is a little bit slow. But let me try to. I have that chart, I believe. I can share that later, and I truly believe that I've shared that among our community already, but I'm trying to push those charts. But we are facing the 200 media average also. It's a 2 weeks time frame chart. We are trading the 200 media average, but we are facing also, it's a 61.8 retracement. Let me try to show you.
From that,
from this swing
to the low,
well, somehow my browser it's a little bit slow.
Yeah, you just need to restart. It happens on occasion.
It's TradingView eventually massacred with all those charts. But we are facing that 61.8 retracement here. I shared that possibility last year because I was expecting this movement to retest this structure. Let me try to show you a fast example of my default projection. So we are facing the same price level from below. We are fighting the same zone, and at that period I was expecting, and based on a bullish harmonic that completes here also in a monthly time frame. But this is the kind of moment that I was expecting from this price zone. So if somehow they need to rebound or to bounce from here, they may produce some big moves from here. So, and actually I have that chart published on TradingView and other socials, and we can see this published from below. So we are facing now a strong previous support that I will not be surprised to act as a resistance and a strong resistance, and to break this bullish momentum here. But as you said before, we are facing obviously a strong bullish momentum that we never know where it will finish. No, and because it's already 2 p.m. Time for our interview with Dale. Let me just finish, and because I know Dale have special interest on S&P and Nasdaq and other index markets. Let me just try to share those last 2 charts, if somehow my browser allows me to.
Take your time.
I'm trying harder, but I need to refresh this thing.
Okay.
Yeah, but okay, this is, come on, S&P. S&P is as mentioned by Blake. We are trading the 127 extension. Come on, this is terrible today.
Put a magnet on it.
Yeah, this is completely.
I do that with candles to make the market go my way. All right, go
So,
ahead.
but yeah, it's a 4 hours time frame chart. You are facing the highs, the previous structure highs. You are retesting the highs, obviously, on a daily, and we are facing the two bearish patterns territories. So it's
So
a sharp pattern.
you're also expecting a reaction from current levels?
I'm expecting a reaction here because in a 4 hours time frame, it's clear. I believe Dale will agree with me. We have a three drives, or a kind of a three drives that usually will retrace 100% of these movements. So 100% of these structures. So I'm not saying the price will fall from here. We need to violate this structure in order to at least to increase the probability to search for these 38% retracement by default. So this is the 38% retracement from the structure highs.
Do you have anything, Andre, up around, say, 2830-ish or 2820? I see that 141.4. What's that?
Let me try to clear this. Above.
Yeah. What's 140? Yeah, 141.4.
Actually, it's just another fib level, but nothing.
Okay.
There's no pattern in terms of Fibonacci levels. There's no pattern above. So it's
what's a red X?
Fibonacci.
What's a red X up there signify?
No, this if somehow we need to trade these patterns, that's the level I suggest to respect. So
I see.
In terms of limits. So I believe if the market violates this level, will increase, at least will increase the probabilities to trade higher.
Okay.
Well, and that's what it is. We need to assume some risk.
So it's kind of like a stop.
If so, it's like a stop loss zone. Yeah.
Okay,
and just to finish, Dale, because I need to let you go with the interviews. Just to finish with dollar, because we are facing kind of similar behavior, but not completed yet. And eventually, this is a daily time frame. This was not the best day to show you my chart because somehow TradingView is not collaborating well. But just to finish. And it's another three drives eventually, but I have this one published on inside ForexAnalytix, but we are facing one eventual third drive. No, we are trading. We are retesting the previous structure highs. Actually, we were printing new highs today.
Yes.
And that said, the 113 extension 9607 is my it's the limits, let's say, the completion point for another bearish crab, the crab pattern, and it's synced with the 127 extension. There is an internal butterfly pattern also pointing at that level. So the butterfly will complete at 127 extension from this previous bearish momentum. We extend this momentum above, and the crab will complete at 113 extension from all these swings. So we extend this swing above at 113 extension, we get the crab, and here we have the butterfly at 127 extension. So 9604, 9607, it's my completion point for one eventual bearish opportunity to trade dollar into a bearish momentum, obviously. And that said, I hope you have a nice week, and
thank you, Andre.
From my point of view, Dale. Thank you very much.
Thank you, Steve. Hi, Samantha. I'm going to make you the presenter now. Thank you for your patience. Looking forward to talking to you again. It's been a while. I promoted you as being a very tenacious pro trader, and I believe that. And you'll see the drop-down menu, Samantha, to share your screen. And also, let's see if your mic is enabled. Your mic is on. So you'll see. Hi, how are you? Hi, Samantha. How are you?
I'm doing well. It's really great to talk to you as well. All right, so showing screen, which one of my monitors? That's the fun thing.
Yeah, let's see what you come up with. Pick the one that has the charts or whatever you're going to email me. That'll be the one you're going to want to show. So
Yep.
you just click the mouse on that and it should come up. How many screens do you trade off of?
5.
Oh, you got a little spaceship going there. So,
What do you
okay,
need?
so we got it. You're showing me Leduc trading,
Okay, good.
volatility index. That's kind of putting in a little saucer bottom down here. So, Samantha, you know, I talked to you last time, and you did impress me with your conviction on different calls. You're right about quite a few things. So, I'm assuming that you're looking for some type of low here in the VIX, and that perhaps the market is going to finally start feeling the effects of friction, trade friction, dispute, war, whatever you want to call it. So why don't we go ahead and tell us what's on your radar?
All right. First, I did put this together for you as well as clients. So happy to share that URL if folks listening want to kind of follow along.
Okay.
I think best by writing. So
Okay.
I do not have one charting platform or trading platform. I have several. So basically I grab stuff also from Twitter. There's fabulous exchange of ideas where we found each other, right? So you've got day traders, option traders, macro, the whole thing. So I have basically assembled some charts that I think are kind of big picture, if you will, macro. And this is one in particular before even getting into the volatility picture, because it has obviously been going down of late, but I think we are kind of approaching some inflection points, or at least a pause, with probability in the past of reversing. One in particular would be the NASDAQ. So we're coming up to that 61.8 extension off the whole 2002 bear market. It's coming up to about 183 in the Qs. And I've been saying for the past month and a half that this is really my price target for this grinding out higher to the S&P at 283 and the Qs to 183 roughly. They can overshoot, but I think that's a typical and high likely place for a pause and a reversal. So I'm then much more of a bear once we get to these levels, and I'm patient to wait for those levels, but it is very much, I'm going to go to rate.
Did you have a moment of doubt about your magnet? I mean, a lot of objectives and fib numbers are like magnets.
They're just tools in the toolbox. Yeah, they're just among many. I use macro very much as the backdrop. I use intermarket analysis, which this is the VXV, not the VIX. So their technical analysis for me is pattern recognition. It's study of volatility. It's helping to identify when to enter and exit a trade, but it is fundamentals and intermarket and sentiment and macro that really form a much better picture. Fib is just one tool in toolbox, but I look at basically this congruence of themes. So on the macro side, there is no question a few things going against the advance, or at least pausing the advance. We used to have the Fed put. Now we kind of have the Fed call, meaning it's capping the advance with the Fed rebalancing and gradual rate hikes.
Great term.
You know, many are saying they'll talk it back. I'll believe it when I see it. Right now, it looks very strongly all systems go by the Fed to rebalance and to gradually hike rates. We have the trade war escalation. So even if Trump is, you know, following through on his threats and his promises, there is the response, if you will, in large part by China. And good things can happen, by the way, in negotiations. But the point is, they're playing this for real. And you can see that with the yuan devaluation. You can see that with their fear of banking crisis. You can see that with Bank of Japan also trying to fight the devaluation of the yuan. And there's like a duel right now, all to support, you know, our market, which, you know, thank you very much. But we have to get some real price discovery sooner or later. And there is a lot of reasons to be bullish, no question. We got 150% of U.S. GDP is in our stock market. There's incentive to keep it elevated, no question. But that's also where the everything bubble came from, right? It didn't get its name for nothing. So if we have some policy missteps, definitely the currency wars. And then you combine it with a fib level, right? So that's what I'm talking about. Is when you combine it with other technical indicators, that's when I start. Yeah. So that's when I start to really look at that.
Let me ask you this, Samantha. During after Netflix earnings came out and it came in about $50 lower, were you surprised that it recovered everything the same day?
It didn't recover everything, but I was not surprised that it did what it did because I follow unusual option activity. And let me just show you real quick because this is. Can you still see? Can you see a blue screen now? All right. So every day in my live trading room, I have this particular screen open. Okay. So when it touched down, intraday you can't see it now, but in any case, 347, 348 is weekly support. So once it started to form a double bottom intraday, and it was 10 o'clock, there was a ginormous $18 million bet in the January $350 calls. That was it. It did not go a penny below after that came in. So there was tons and tons of chasing. This has August now, but this particular indicator right here, this is just option flow. Volume is today's activity. This was actually not today because we're not open. It was yesterday. But the point is, there were chasers, long and short. It all had July expiration. And then an $18 million, I'm serious about this order came in and it went up from there and it didn't stop until what, 380?
What a great trade. So ended up, they were 350 calls. Any idea what the price was when they came in with that size?
They were $39 and they went to 60 same day. So that was not just but they're still in there. So that's not done.
Yeah, it hasn't filled the gap yet.
Correct. Yep, exactly.
I know you're big on gaps, aren't you?
I like gaps for lots of reasons because they show momentum. But yeah, that's why on the Netflix deal, its recovery was no question supported with size. Okay, so getting back to macro.
Okay.
We have some issues right now, obviously, with the won devaluation. It's a really big deal. We have a potential rate spike happening, which I really don't want to miss because a lot of people are expecting rates to actually just tumble over. And I would remind them what happened. And again, they can kind of look at this this piece that I put together for attendees. We definitely have this yield steepening, flattening, excuse me. Yes. Once, we can have a very quick, brief, if you will, rate spike, and it can cause market pullback. So it doesn't mean that we're topping as a result. You can see what happened in prior years, obviously, but I do see a situation where we have not only potential for TLT to move down and rate spikes, but then it's going to be a very big deal because this is TLT that I wanted to show. And I think I showed this to you before, actually.
You did, yeah.
Yep, it's the same chart, but obviously today, this wedge, and by the way, we have record short treasuries, as you know, record short high yield.
Isn't that where we were, kind of where we were last time? Because we were a little contrarian then too, thinking that, everyone was, one universally embraced narrative is the bonds are in a bear market, and you disagreed with it, that there's one more hurrah. Right.
And we had a bounce, but we have not had a breakout, Dale, right? So we're still turning around. And in fact, we've had, what's the, I can't find it now. I'll find it. We have been sideways, obviously, with yields in that 2.8 area for about 4 months now. So it's going to move. And typically, the first move out of a triangle is the fake one. We'll see. We'll see. But I think this is going to pull back down into this wedge, give the shorts, a little chance to cover. But I do see this this treasury going against, if you will, or being fueled by the shorts.
Okay, so massive short covering rally once we break out to the upside in the triangle. A little pullback here to give the bears some hope, and that adds fuel to the upside breakout. Am I reading it correctly? All right.
Exactly. So I see a little bit of a rate spike that's going to scare. TLT pulls down, and then obviously I'm wrong, right? If it breaks this trend line, but I'm expecting it to have the energy to get back up and above and go much higher.
New all-time highs or new all-time highs?
Yep.
Okay, so you're describing a deflationary scenario that's coming here.
I'm
correct?
expecting a short covering, a short squeeze in the treasuries. So
okay, so it doesn't have to be deflation.
Correct.
It could just be positioning in the market.
And we can still have, this is all relative, if you will, with the indices, but we can still have a lot of currency shenanigans going on that's going to have, I think, a great impact on gold. I was very short the gold and miners into a support level for yen, and gold itself that shot through it like butter. So I was really actually surprised. I thought GLD would start to accumulate and bounce in that 120 area. It just blew through 115 this morning. So even though I can have, a macro to micro trade analysis, it can still surprise big time. Now, where is it going to stabilize? Miners have actually been hanging in there really well, but look at this squeeze in miners. This is GDX. Can you see this?
Yes.
Right. So gold definitely broke down, and it's not 117. This is an old chart from last week. It's now 114.90 this morning in GLD. Sorry.
Right. And the miners usually lead. That's why it was bearish gold, is when gold was 1360. The miners weren't close to their levels that they were at when gold was 1360. So now you're using GLD, so that'd probably be the 1290 area that you show up there. So do you have any levels where there might be a great contrarian buy setting up here in gold? Is that what the miners are saying?
There are three levels that I like. First of all, this is a little bit too technical, for intermarket, but I'm just going to say this gold miner bullish percent index. I'm very fond of this because it helps me technically kind of put lines, if you will, on a chart, and then overlay that with Fed rate hike cycles, right? And you can see that there's absolutely a correlation between when the Fed hikes and miners, increasing. So I'm basically, my thesis was trading gold and miners down into the next rate hiking cycle and then up. So that's first and foremost the macro backdrop. Second is I really would like to see this stabilize at 30. And then right now, anything on GLD above 115 is a buy, because that is very strong monthly support. The problem is if it breaks 115 decisively, then we're in some more pain. So it's a very big break. And for the yen, for those who trade ETFs, FXY has been really one of my tells for trading gold. And obviously it's been going lower and lower. We're really not even safe until it gets back up above 87. So this fell out of that same kind of pattern, and this needs to get up above all of that to be a safe trade higher for FXY, yen, gold, miners. But right now, all eyes are on, no question,
the yuan.
Oop.
I want a yuan.
the dollar yuan carry trade. All eyes are on this puppy, no question.
Okay. Oil's been pretty wild. Any view on, is it untradeable now, or do you have some kind of view on, we've had a couple of real sharp setbacks, one from 72.80, one from a little over 75. Do you think there's another run in oil to the upside?
A bounce perhaps, but I've been short since July 5th. So,
okay.
And I'm only going to show you EOSO because I know it's not crude, but direct, but again, a tradable ETF, which happens to serve kind of my active investment clientele.
They look similar.
They look similar, and I can do the pricing on my other platform, but for this one, so this really, when they oil rally was over, and then of course this quote unquote bullish inventory that came out last Wednesday was not even close. So this to me looks like a great place for a bounce on weekly support. I will be bullish if it gets back above this level. Otherwise, I think this is rolling over to the 200-day. So I think XLE is also, I'm short XLE, some plays within the oil and gas contingency. I'm also short CHK from this break. So I don't see oil going significantly higher. I think for this year, it's going to trade down into the midterm elections.
Interesting. Okay, I think we've covered almost every asset class, bonds, stocks, metals, currency. Anything that we've missed?
Volatility.
Oh, that's right. Yeah, your original chart. Okay, so
we started on volatility. Let's end on volatility. So this, and I know this is very confusing for lots who do not, get crazy over lines, but I'm just going to kind of point out something that I'm looking for, which is that volatility chart that I showed you before is obviously elevated from the lows. That's VXV. This inverse head and shoulders is setting up for me. So it is completely negated, obviously, if it takes out these lows. But I really am looking at this as a potential very strong inverse head and shoulders. And I'm wrong, if it breaks, but I'm watching that, and that kind of goes back to that chart that I started with, which is, sorry, I know that's annoying. This little thing that I put together helps me, determine, if you will, if we have elevated volatility, backwardation, where we have risk on, risk off levels. And this also, to me, means very much, a happy portfolio is a hedged portfolio.
Okay, so the people that got tired of paying for insurance wish they had it in January, and then they probably started doing it again and said, oh, I'm not going to waste my money right when we're on the verge of perhaps even just to correct the recent drop from 28 to 13. What are you looking for if this turns? A challenge of those highs or a retracement of the high we had in Jan-Feb to recent lows, maybe a failing rally? Any ideas as to upside potential on the VIX? So, and is this the instrument that you use to trade? Because a lot of them have massive erosion.
Yeah, massive erosion, because it's not an investment vehicle. It's a trading vehicle unless you are short. And by the way, we're right back up to heavily record short VIX again. It's like we just had this experiment in January, failed badly. They're right back at it again.
I wonder which ECN will be defunct if we get another spike like we had before.
I'm sorry, say it again?
Well, we had, I think it was the XIV that ended up, that was the end of the contract after
Correct.
February.
I use ZIV now as far as, sorry, this looks crazy up here. As far as a chart kind of pattern vehicle, if you will. So above 79 is going to be market melt up, but it has to get and close above 79, that kind of thing. So I use ZIV instead of XIV now as, as a chart pattern kind of tool. But typically I'm trading VXX.
You're a champion, Samantha.
I just work hard every day. I'm trying.
Well, I know you're tenacious and passionate about what you do, and that's why I love having you on. And I think you wanted to talk a little bit about female traders or women learning how to trade? I know that's one of your passions. Do you have a message for the ladies in our audience that are watching us live or watch the recording later on?
You know, it's a message for both men and women. So women in trading, we're very much, I would say, trading in the shadows. We exist, there's no question, but need to be, you know, not just recognized, I think, but the light shared. So you already have seen my, you know, tweets in this regard. We have demonstrated, you know, our value, but it is still very early in the innings, if you will, of getting representation in everything from, you know, only 2% of mutual funds, 12 trillion worth of, are managed by women, and returns are higher by women-run hedge funds, but only 1 in 20 funds employ women. Melinda Gates is trying to, you know, get the message of you're missing out by not investing in women. Less than 2% of VC money goes to women, but women make 85% of the consumer product spending decisions and control 70% of the financial decisions. So we have in financial services not evolved as, I would say, as well as, and there's still improvement in law and medicine, some other fields, but this is time. It is time. So even I have a Twitter feed that's only 9% women when they do their, you know, analysis. What a shame. I want to change that. I want to obviously encourage strongly for finance platforms to actively promote women in trading, to make an environment that is nurturing is the wrong word, that is welcoming for women in trading, because most of these platforms, as good as they are, Seeking Alpha, Real Vision, StockTwits, they are still men caves, and you know what I mean.
I do. And I'll tell you something, if anyone can make a crack in the glass ceiling, it's you without even a helmet on. And you know what? I believe in your cause, because besides you, I've interviewed some very sharp female traders in my 1,000 interviews, and I wish there were more of them for me to talk to. But you know, hurrah for what you're saying. It's true. And I'm in your corner and rooting for you. You're a great trader. You're a great ambassador for what you're trying to accomplish, Samantha. Congratulations.
Sincere thanks, and I really appreciate, you know, and your contribution to encouraging, elevating, empowering women in finance and trading. It's going to matter. So thank you so much. I really appreciate it.
Well, I'm glad you went into the business, because your views are crystal clear. And why don't you show your website so people can follow you, both men and women, and anything I could do to support. I mean, tweet some of the women that you feel have leadership, and I'd be happy to give them some visibility in my Twitter stream.
You're wonderful. Thank you so much, and I wish you a very successful trading day. Okay,
so let's go fishing. This is Samantha's website. She uses a lot of fishing analogies, and I don't know, I've been hooked a few times, so I feel like a fish at I've had the hook in my mouth. So thank you so much, Samantha. I wish you a great summer trading season, and hope we could get back together in the fall and see how some of these things worked out.
Oh, I'll be honored. All right, thank you so much, and to all listening, have a great afternoon.
Thank you, Samantha. Samantha Leduc, you could follow her at Samantha Leduc, and you could go to her website at www.leductrading.com and learn how to fish with Samantha Leduc. Okay, that's a wrap for us today. I see everyone for TGIF tomorrow. Good hunting the rest of the day, and see you in the private chat with Blake and the team. And don't forget, go to Forest Park FX and talk to Trent and Justin about what may be a better trading situation for you broker-wise. Adios, everyone, and most of all, remember, don't just count your pips, count your blessings. Adios. You're welcome. You're welcome.